Welcome to 𝐄𝐓𝐇𝐄𝐑𝐄𝐒. We talk about investing, finance, and professional development. As the current time of exactly 10 a.m. on the Eastern Time, Ethereum closed at $1,709, up about 1.10% so far. With respect to over crypto market on this Sunday morning so far, across the board is again relatively flat. Seems like it's just more regurgitation news around the recent earnings that we've gotten. And some depictions around, again, more regurgitation news around the job numbers that came out, triangulating with the potential rate hikes that we might be seeing again, but, obviously much later in the future in September in the upcoming FOMC meeting. And before, the FOMC meeting, we have the CPI report that's coming out on next Wednesday, again on August 10th, so it's approaching quite shortly. Seems like there's some representative from the Feds and some economists saying that, despite, the blowout July job report, which was, it was a good, healthy report, but the ominous foreshadow on the rate hikes seems logical that we might be performing more aggression towards that going forward. That, and this is also being supported by a Fed governor, Bowman, and she sees similar size of rate hikes ahead after the 3/4 point move that we have already seen twice in the last two FOMC meetings. So see another 75 basis point, and then rising that all the way to 1%, even higher, can be a possibility. So when you do that, you're basically squeezing, the debt users, which are, if you look into that, that's basically all the corporate companies that are reluctant to be borrowing debts to sustain their operation. But now if you keep increasing it at this high rate, you basically force, corporate companies to shave down the capital expenditure. And what are the capital expenditure from real estate, which is, something that they're renting on a month-to-month basis as a lease for their office space around the world or domestically. And then secondary would be the human capital front, right? So increasing the rates force more people to basically leave, the workforce. So despite the job report came out to be a blowout for this month, increasing the rates will only make the case worse going forward. And if you think about what's the key mandate that the Feds have, right? The mandate of the Feds is to, look into the job numbers, right? Which is something that I've been talking about basically ever since Jerome took office again. And with respect to the inflationary pressure, which is becoming more of a primary factor, but before it was more of a secondary factor, right? So job number is still, important for us to understand the health of the economy. So raising the rates again would just do us no favor at all. So we'll see how the CPI report coming out on next Wednesday look like, or this Wednesday coming up look like. And that should, technically give us some sort of a momentum shift up or down. And if we get a surprise again, right, hopefully we do, or hopefully we don't, so we could buy at lower levels depending on your psychology. We'll see how that goes, right? I think the surprise on the job report was definitely, again, a surprise, right? That's why it's called a surprise. And that gave us some bullish sentiments, but being mitigated by the Fed sentiment. So we'll see how, what are the lucks, that we have in the foreshadow elements. Okay. So before I dive into it, just want to catch up with you guys as well. It's been a while since we last talked. So it's Sunday, and I woke up not the most refreshed for some reason. I don't know why. I woke up with a massive headache. Maybe I was eating a little bit too much sodium last night. I don't know. I was just cooking this pepper steak with sauteed onion on the side. But I did drink a whole Gatorade, the zero Gatorade. So I guess I woke up with basically sodium overload. And at the same time, I've been just try to find time to keep it cool and collected and just kind of chill out a little bit. It's been a while since I kind of took a break. So I'm looking forward to identifying, gaps in my calendar where I could actually allocate some time for me to take some time off. But for us, you've known me for quite some time. Like I'm one of those people that that feel guilty when I'm not performing or producing or at least creating value or improving in any ways or some sort, right? That's why I'm like like I'm good at investing, helping with startups, cultivating businesses. That's why I'm good at like even like bodybuilding in a way. Like if you know me, you follow me on my Instagram. I do work out quite a lot. And with respect to the diet side, to the training side, I'm quite progressive on that front as well to make sure that I'm always in my tip top shape. But to be running on this like high level all the time, it can definitely get draining. So I was just like spending some time yesterday with a friend of mine who's the CEO of a educational company. She's relatively young, just like me. And she and I spend like the afternoon together, just like drinking coffee and just catching up and seeing ways I can be helpful to her. Despite her and I are both like, in similar financial situation, we're both relatively young, right? Her and I are both like 31, 30-ish, Um, we both like hit that question mark on like, and sorry for me rambling again. Um, is it like, why do we work so hard? Like, what's the ambition coming from? And things like that, right? And what's the driving force? Like, how do you deal with the behavioral side of the equation? Like, how do you deal with, just being on the beat all the time, without like really taking some time off? And she told me that she worked so hard that she had a tumor, which was it was nothing crazy. It got better over time, but and also like with my if you've been following my podcast recently, or my not podcast, like our videos on a day-to-day basis, my advisor, my partner Gary, passed away at 61 years old. For me it's like very surreal. Like I still think like, wow, like Gary's really gone. Like I literally had like dinner and lunch with him two and a half weeks ago, and then next thing you know, he's passed away. So it's just a lot of pressure, for some reason. Like maybe what I've been doing so far has been such a grind. At the same time, talking to a good friend, with that girl yesterday, combined with Gary's, passing, to me, just like always having that chip on my shoulder, it can definitely bubble up into something that I don't know if it's sustainable for me. So I need to kind of, relax, I guess, my rubber band in a way for me to get better over time. So, anyways, apologies for the rambling. It's just me kind of vetting out, I guess. Hopefully, you guys understand where I'm coming from. So let's just dive right into the technical, as we should do that anyways on a day-to-day basis. Let's just keep it on the schedule. So with respect to recording time of 10:09 a.m. Jeez, I talked about 9 minutes. Sorry about that. Ethereum's current trading at the same level as we pretty much open at 1691, so we're basically there, $1,700. And on a daily right now, you can still see that we are still lingering on, try to find a directions of where we want to go to. Do we want to go up? Do we want to go down? And I think we're consolidated for a reason, because we're pending on the CPI report that's coming out on Wednesday coming up. But I would say the propensity of us keep going up because of the blockade that we have, right? Going up to 1750 all the way to 1850 is a quite monumental level of blockade. I think the level of like us cooling back down to like the 50 out of 70 all the way down to like the 35 out of 70 is a lot more likely than keep going up from here. So I do see some short-term volatility again, but in the weeks and months out, right, as we have discussed, I do foresee some more bullishness because we just crossed up recently, and also on the monthly as well. We still have some room to go up to, knowing the fact that we pretty much plateau on the monthly front. So I do like it. It does look like we're trying to reverse, but daily wise, on top of like days away from now, we should see some negativity coming. That's just how the technical should look like at the moment. And with respect to Bitcoin, you can see that we've been gradually taking the staircase upward, cross down, and we've been basically contemplating, do we go up or go down? And knowing the fact that we do have a sizable amount of leap up for us to get ahead to basically the next level of 28,500, we are at a blockade level right now, 55 out of 70. You could see that last time we got close to a higher level at 60, we got canceled out twice. So the likelihood of actually coming back down will be more likely as we approach, obviously, the CPI report coming out. But with respect to the near term, I think, we might see some, surge up to 60 out of 70 again. But that's about it, right? We're still like kind of grinding up right now. And with respect to a large leap up that we have to get up to, I just don't see any specific positivity that can propel us to go up from there in the short term. But again, on the weeks out, we are about to form a golden cross. We are looking for levels to go up on a weekly to a 62 out of 70. So I do like it. Monthly wise, you can see that we clearly looking for some, we've been forming some plateau already. So a reversal coming back makes a lot of sense for us. And across all the other coins, obviously they're trading in a mixed bag, but across the spectrum, I would say, again, right, as we are approaching the CPI report, as we approaching the, more of a separations of time period between the upcoming CPI report and then the FOMC meeting, and then some corporate earnings here and there, we should ideally see some short-term volatility and then some weeks and months out reversal or some sort of a bullish momentum from here. So appreciate you. Have a good rest of the Sunday and take care.